Hi, everyone. Good morning. Thank you for joining today's session. Can everyone hear me? Kindly indicate if you can hear and see me clearly. Okay, cool stuff. Thank you all for joining. My name is Boluwatife, and I'm a senior associate on the TechCabal Insights team. TechCabal Insights is TechCabal's data, events, research and consultancy arm. And part of the things that we're doing on the TechCabal Insights team, which is something that we've started this year, is a startup support program that essentially aims to provide early stage startups with all the supports and the help that they need as they grow. Because as we all know, I'm glad that we're all early stage startups on this call, and investors, which are our speakers for today. We all know that startups face a lot of problems, growing out. If it's not problems with, talent management, then it's problems with fundraising, or it's problems with growth and marketing. And they don't always know how to navigate those issues, right? Which is why we thought at TechCabal Insights that it would be great to sort of have a platform for them to, collaboratively solve these issues. And we've started the pilot program this year, and this session is part of that pilot program. We decided to extend this session. However, it was supposed to be a private session with the startups that have been selected to participate in the program. We decided to extend it because we realized that it's something that people would want to benefit from. And even when we put out the call to have people join and sign up for the session, we got a lot of responses, and we could only take a few people. So congratulations, everyone who was able to make this meeting. So we're going to, Eniela, if you could just move the slide a bit. Okay, so on this call today, our speakers are Maria Rotilu, who's an early stage investor and the founder of AfroPitchPrep. And we're also speaking with June Angelides, who is an investor, speaker, and entrepreneur. So this session is, of course, brought to you by TechCabal Insights in partnership with AfroPitchPrep. And I'll let Maria also just share some insights about what they do at AfroPitchPrep, and just, share more information about that in a second. But before we get into that, yes, and okay, I think we can just stay on this slide. So I think I'd like to have Maria share her screen and then just walk us quickly through the AfroPitchPrep program.
Thank you, Bolu. Hi, everyone. I think June actually will have to share a screen and kind of lead this because June is taking most of the session. She's been kind enough to lead this session with us today. So if June leads, and then I'm happy to do a quick intro on AfroPitchPrep and also my journey, and then I'll hand over as well to June. How does that sound?
Perfect.
Fantastic.
Thank you. Over to you, June.
All right, can everyone see my slide?
Yes, we can.
Brilliant. Well, hi. Hi, everyone. Lovely to meet you all today, and thank you for taking the time. Actually, I'm going to ask Maria to come back in because she's going to do the intro to AfroPitchPrep for now, and then I will take over.
Fantastic. Thank you, June. And I will just put in my, I guess, background and intro in there so you kind of see the color to AfroPitchPrep. I think AfroPitchPrep is pretty much trying to support African founders as they raise their first funding round. The first funding round is hard, it's confusing, you don't quite know what to do, there's not a lot of information online. And given my background, both scaling startups and also investing in startups across the world, this is a huge gap across the world, but even more so in Africa. So that's what AfroPitchPrep is really trying to do. And we do this in three major ways. There's a whole content and tactical support piece, which kind of gives you information through our newsletter, for example, what a good pitch deck looks like, how to set up your fundraising data room, which investors you should be speaking with, what investors are looking out for, that type of relevant content shared weekly with folks on our subscriber base. We also have one-on-one mock pitches with global volunteer investors. So the beauty of a pitch is practice really does make perfect. And many investors, many founders don't exactly have the right resources and I guess platforms to practice their pitches. A common thing that happens here is that they burn leads. They actually practice pitches on actual investors. And you really don't want to do that because first impressions really matter with VCs. So we have an incredible list of volunteers, about 16 so far, who are actual investors, pre-seed investors across the globe, who've very kindly given 30 minutes, 1 hour of their time every month to pick 2 startups who will have a one-on-one mock pitch session with them. And what happens there is the founders pitch and the investors give undiluted feedback so that they don't have to, make mistakes with actual investors. And I guess finally, we also have strategy around like events, sort of, kind of what we're doing with TechCabal Insights and other platforms just to kind of get the right founders getting this information that is really not shared anywhere else. So that's a bit about AfroPitchPrep. We're quite new, but we're very passionate about what we're building. So yeah, I hope that gives some background into what we do.
And Maria, it'd be great to hear a little bit about your personal background because you've got a great story.
Thank you, June. Yeah, so I'm an operator and an investor. So for the first 10 years of my career, I scaled startups. I did that as the country manager at Uber, and then I also led branches of fintech startup. Some of you might have heard of it. And a lot of my expertise before becoming a pre-seed investor is really scaling startups, multinational tech startups. So I did that for a long while and then moved into early stage investing. I led the Oxford Seed Fund, invested in Oxford affiliated ventures. I also spent some time at Hustle Fund. Looking at startups across continents, actually pre-seed startups. So the US, Latin America, Southeast Asia, Africa, but really focused on pre-seed. I'm also an angel investor and I angel invest mostly in African startups across B2B software, fintech, health, some ed tech. And yeah, right now I lead a fund within Europe. It's focused primarily on Europe founders in my day job. But I guess on the side, this is something that's, we're quite passionate about. I think African founders need all the support they can get. I really do think there's a lot of opportunity on the continent. There's so many, opportunities to innovate. So yeah, I really want to support that. So that's a bit about my background.
Amazing. So I'm going to tell you a little bit about me before we kick off the session. So my name is June Angelides. I'm originally from Lagos. I actually lived there for the first 17 years of my life. I moved over and I guess my first entry into the world of tech and investing was when I joined Silicon Valley Bank back in 2011. We were pretty much a startup bank at that point and had the opportunity to watch a bank being built. And that's when I fell in love with tech entrepreneurship and wanted to dabble in it myself. So on my second maternity leave, I set up a coding school for mums called Mums in Tech. That put me in the same position as you're in today, where I had to go out and look for people to back me. Initially, it was sponsorship, but then we tried to find a business model that would work. So reached out to the few angel investors that I did know at the time, I really found the whole process very confusing. Didn't really know where to start in terms of preparing a pitch or even how to present the business or figuring out what it was that I needed in terms of capital. So I guess finding that process super frustrating, having met other founders in a similar position, I really started to think, well, how can I make a difference? And started to look into venture capital. Came across this incredible firm called Samos, where I've been for the past 4 years, focusing on early stage investing. And then also because my heart, similar to Maria, has been drawn back to the continent, I set up an early stage syndicate called the African Co-Investment Syndicate earlier this year, where I'm investing in 5 sectors that you see here, invested in 2 deals so far, and really passionate about supporting founders at the earliest starts of their investing journey. So I'm keen to hear a little bit more about what you're up to. But in terms of this session, we really wanted to spend a lot of time, really on you. So I'm just going to whiz through, a bit of a summary as to what we're going to cover today. But I think the key is to make this as interactive as possible. So don't be shy, put on your cameras. We're here. This is a safe space. There's a small group of us for a reason, because we really want you to use this opportunity just to help dispel any myths around fundraising because we've all been there ourselves. We've former founders having been through the process, and really wish we'd had people to go to and ask, all the silly questions that, are important, because I think that's the way you're able to come into the room fully armed with information. So I'm imagining, but it would be really helpful to know in the room who is raising their first round of capital. And if you're happy to use the chat, we can do that, or you can put your hand up. Fantastic. So let's, I would love for everyone to participate. Don't be shy. We're all just people. So yeah, let's keep it very, very real in here. So if you're raising, pop your hand up or put it in the chat, just so we know if this is your first rodeo with investing. Amazing, that's super helpful, thank you. So I guess the first thing we wanted to talk about was, just that getting ready for fundraising piece. What is it that you need to start to think about even before you step into the room with an investor? And I think this is something that, people don't talk about enough, doing that prep work. I've spoken to founders who just haven't done enough groundwork beforehand. So I think it's important that you're coming into the room as a subject matter expert. The investors are half the time nowhere near as proficient in your market as you are. And I think that's something to own when you walk into the room. You are the best person, and you have to believe this at the end of the day, that you're the best person to be building this business, given your expertise. So I would say really having done that deep dive into the industry is really key. Having those facts and figures at your fingertips, knowing it inside out, knowing all the pain points with that particular industry, and having validated as much as possible. We talk a lot about traction, and I think there was a few questions. Some of you sent questions ahead of time, and please do feel free to interrupt me at any point, because as I said, with each section, we're going to happily take questions from you. I'd like to keep this quite a discussion as much as possible. So if you do have questions as we jump around, just let me know. Yeah, traction. What should you have before you walk into the room to speak to an investor? I think anyone would expect that you've done your market research, that you've spoken to possible customers, and you have some data. I think there's nothing more beautiful about founders walking into the room, having concrete data in front of them. And this doesn't have to be anything fancy. We have people hacking away in WhatsApp groups. We have people hacking using Excel. There's so many ways that you can do this on the cheap. No one is expecting you to have fully built your product before walking into the room. And I think that's super important, that people know that it doesn't have to be a costly process. The reality is, and I'm sure many of you have been in this situation, you might be in between jobs. It's absolutely fine. You might be working on this on the side. So nobody's expecting that you've invested a ton of capital beforehand, before coming in to speak to investors. But I do think it's important that you are tracking progress, and you've had to think about what progress means for the particular sector that you're building for. So say if you were building a consumer business, and maybe, for example, you wanted to build something in the, let's say, menopause space. You'd have spoken to a couple people going through menopause. You would have had customer interviews, and then you'd have concrete data around like what are the pain points that they're going through, and just something to show that you have validated why this business needs to exist. Something super obvious, but perhaps people don't think about enough, just really the details around how much you need to raise. I know it sounds obvious, and I think there was a point where we would see people come to us and say, look, we're raising 250, and we'd say, why are you raising 250? But there was a trend around, we're raising 250,000. I'm like, but why? What are you going to do with that 250, and where does that get you in terms of actually achieving certain milestones? What does that give you in terms of runway? Like, how many people can you hire with that? Do you need office space? What materials can you buy? Like, what are you going to actually concretely achieve with this money? And it would surprise you how many people pick that number arbitrarily from the air, given maybe their peers have raised that amount, or they'd say, 1 million. But what does that 1 million do? And actually, do you need 1 million for your business? I guess another thing to really, and I harp on a lot about this, is even that thing of, does your business need VC capital? This is something I really want to dive into at some point, and I'm happy to answer any questions. But I think the reality is there are businesses that don't need VC money. If you're not aiming for, returning 10 times what the investors are putting in, if you're not really aiming for that exponential growth, and that's fine. And I think that's something to bear in mind, that that's actually okay. You don't need to be, lifestyle businesses are perfectly fine. And I think that's something to say about VC having been super glamorized. But it's so important to know why you're raising the money, actually sitting down with yourself and thinking about what is the ambition for this business. And then we go on to valuation. The reality is, valuation, as much as we'd like to believe that, there is science to it, it's a combination of science and art, and very much dependent, as a lot of us would have seen in the last couple of months, dependent on the market. And I think at the moment, valuations have been very topical, because they're not where they were even 5 months ago. So I think it's one of those things that's very hard to pin down in terms of what is the right number to put on a company. It's very subjective. So I think it's one of those ones you have to sort of sit with and think, well, how much of the company am I willing to give away at this point, and where does this get me? Use of funds, I touched on this lightly, but I think it's super important that you know your numbers, that you take the time to put together a very comprehensive Excel model, just so that you completely understand and can talk through when you're sitting in front of an investor, what you're going to be doing with your funds. How much are you spending producing goods on materials, or how much are you spending on advertising? Again, it would surprise you to know that there are a lot of times I've been in situations and the founder can't talk through the model. I think, as scary as it might be to put together, because all of us, not everyone has that background, and that's fair enough, but I think get comfortable with it, get someone to walk you through it. If you've not built it yourself, take the time to understand what it is that's within that model, so that you can have that conversation when you're sitting with the investor and be able to confidently say, this is why we're spending every single penny, this is how much it gives us, and this is the reason that we need to take your capital to supercharge the business. Preparing your deck. I know it sounds obvious, but oh my goodness, I've seen some very ugly decks in my time, and it's not fun. So please invest. I'm not saying Canva's amazing. We did this whole deck with Canva. So please check out Canva. You don't have to spend a fortune on a designer, although Fiverr.com is amazing. You can get a designer if you really wanted to invest. And I think you can do that for like under $200 easily. However, get a friend who's great at design, but honestly, it makes such a difference. And first impression really counts. When you're thinking about the investor opening that up for the first time, not seeing a very clunky deck, something that looks visually appealing and just tells the story. I think there's so much to be said for keeping it as simple as possible, but telling a clear story about your problem, about how you solve it, about how you validated this, and how you're going to make money ultimately. And also that thing around the team, I think really use your opportunity, that your the page about your team, use that opportunity to highlight, just how amazing your team is, and all the credits you have that bring you into the room as the best placed people to build this business. I think that's something I always love to see. So I think spend a bit of time on there. Data room. I've had questions around this in the past, and I think it's worth thinking about all the questions that the investor might have for you when it comes to understanding your business. Because sometimes I think there's a lot to be said for, just coming armed with data, having thought about, the roadblocks that might come up. And I think nothing I love more than people coming in and having thoughts about, if you're selling into business, if you're a B2B company, having your pipeline ready, having your model in your data room, even if it's supplementary reading, things that have helped you get to the point where you've thought, actually, this is such a big problem. Having that in the data room is really powerful and just makes it easier for the investor to get on board and to, just be armed with the information to be able to even sell it to their investment committee. Because that's the thing, you're helping us pitch for you internally. And I think that's something that not many people realize. We're having to also go and convince a board and tell them, look, we believe in this business. But I think unless we have all that information really well laid out, it's a bit harder to make that case. And practice. None of us are, necessarily experts at pitching. I think it's something that you learn, and I think it's something that over time it gets easier. This is why sessions like this are important. This is why AfroPitchPrep exists, giving you that safe space to practice your pitch. But this is where your peers come into play. I would leverage people around you just to kind of go through the story, make sure it makes sense, and get feedback. And then the last thing I talk about on this session before I let you ask any questions is that pipeline of investors. I think it's so important to really think long and hard about why you want a specific investor for your round. This is obviously oversaid, but you don't want dumb money on your cap table. Your cap table really does matter. The shape of the round, I think, matters. And I think it's perfectly fine to have strategic investors. So I think being open-minded about how much capital you let certain people bring in based on the value that they add to the business, whether it be in terms of introductions, sector expertise, just really thinking about how you want it to look like, being very intentional about the people that you reach out to, but also when you make that cold email, when you send that email out, just being super clear that you've done your research, that you've looked at the things that they care about. You've been intentional about where to find them, whether they're hanging out on Twitter and you're interacting with them there, or you send them a cold message on LinkedIn, or you've read a blog. But I think finding some relatable point to make it clear to them that they're not just some arbitrary email that you sent, and you can see where they fit into your story and add value. So I'm going to pause there because that was a lot. And I'm keen to see if there's anyone that has questions around getting ready for fundraising. And we're actually going to go in the next section will be more about the actual fundraising process, but this is sort of pre. Does anyone have any questions? And feel free to pop your camera on and microphone, and we can just have a discussion.
While a few people come with questions, I think one overarching point here that is logical but isn't very obvious is that let's think about it from the investor's perspective, right? Like an investor is investing, well, depending on if they're a professional investor or an angel, but both still have returns at the top of their mind. Many people think that you kind of get funding to support a business and then show them that it's valuable and it has potential, but it's the other way around. Investors want to back something that already show early signs of success, not back something for them to go find the early signs of success. So a lot of what you're doing, I guess, as you think about fundraising, is communicating to the investor that this is big enough. There's initial momentum, traction, customer, validation. And should you give me X amount, I'm able to unlock Y, and Y is amazing. That narrative is very key because investors are capitalists. But in the same space, for the lack of a better word, they're greedy. Like they're trying to maximize returns for their LPs, who are the limited partners, who are the people who have invested in their funds. So with that in mind, I have seen many, many decks where it's almost like they're trying to say, give me some money and I'll go figure out if there's a market here. It's the other way around. It's like, there's a market, give me money. I've already started unlocking it. Give me money and I will supercharge that and be able to capitalize on the momentum that I see. So I just wanted to add that. But I know the previous, flow was that we go through this and then take questions, but June really thought that it would be good for us to do this interactively, and I agree. So if there are any questions, no question is stupid, no question is silly. Bring it on. That's why we're here. That's why this is a very intimate session. So please bring them on the getting ready for fundraising, please.
All right. If there's no questions on this side, I'm going to dive into the next section. Everyone good?
Hi, June. I think Alex he unmuted his mic, but then
Alex?
it's back off. So Alex, you wanna ask a question?
Yeah, good morning, Maria, June, and
Good
Bolu.
morning. How are you?
It's been an exciting presentation. I would love what you're doing. So yeah, I belong to Rhapsody team, and what we do basically is to drive lending with our artificial intelligence and machine learning and all that, so that we can automate it. But we have been in this fundraising journey for some months now. So we're going directly to the VCs. So one thing I realize is that most of VCs, when it's not based on recommendation, probably from the partners or maybe close associates, they don't tend to invest in most companies, even if you come with your own idea and all that. So, but they always have a valid rejection reason. They will tell you don't have a unique selling proposition. And oftentimes I would always tell them, because I know companies that raise funds, and what they are doing is still similar to other people, but there's a big market to play. You understand? So I've noticed that for a while, because I think I've met a number of VCs, about 7 and 8. So some will tell you, okay, they already have funds in their portfolio. Probably a lending company or a competitor is already in their portfolio. So that's valid. But some will tell you, okay, what's your USP? What are you doing differently? And all that. So we've been hearing that a lot of times. So how can we work around that? Is there anything we can do to probably change that narrative, or is there anything we can do to probably win their hearts when they ask us for the USP? Thank you.
Yeah, no, that's a really good question, Alex. And I think you've identified one thing. It's obviously a tricky one if a VC has already invested in a competitor. I think also as a company, you probably don't necessarily want them having access to information for both companies. I think in that sense, that feels like a fair response. In terms of the USP and the feedback that you're getting, do you feel that you've given them enough information to be able to clearly see the difference in what you're bringing to the market compared to the competition? Like in terms of the due diligence process, how much information are you supplying them with? Because sometimes there's an education piece here. Oh, sorry, you're on mute.
Oftentimes it's even at the initial stage, after the first presentation, they tell us they'll get back to us. So we're working with a consultant at some point. So they will just circle back to him that, okay, they're not doing anything different. What we're presenting to be different is because the lending is automated, that within minutes we can disburse our funds, and even the collection and the rest of them, they're automated. But they would ask us, okay, what are we doing different from Branch, for example, or ILA, or Carbon, Fair Money, and the rest of them? So it's still the same, almost the same thing. Okay, when you tell them, okay, we're doing probably interest rates, that we have done the survey, we're beating our interest rate down a bit. We have a strong management team, because all of us, we worked in the financial sector, the founders, the co-founders for more than 10 years, and the rest of them, they'll tell us, okay, there's no big deal in all these things. That means we're doing the same thing as other people. They will now present to them that, okay, we know this market is massive, and then there are a lot of people that don't even have access. Usually with the bottlenecks with the commercial banks, they are not able to get funds easily from them. Then we are telling them, okay, these are the large chunk of people that were looking at. We did the statistics, I will present it to them. So I just believe, okay, probably because we don't have a link with them or we don't have someone to recommend us, I
Yeah.
think that's why they're not. In fact, there's this Future Africa, they sent a mail and they shared it on their platform that they cannot, really, they attend to a lot of pitches every day. And they said, okay, if you want to invest in your business, then it has to be based on recommendation. They came out to tell us.
Okay,
So I think it's a major factor with VCs.
I think there is also the element of the storytelling and just really being able to back up that thing that makes you different. And oftentimes, people want to back a company with defensible technology. I think if you can demonstrate that the technology that you're able to produce is different enough, and I think that's where maybe that you need to do a little bit more on the data side, maybe a little bit more customer research, to be able to validate that claim. It sounds like they need more proof, and a lot of the times with investing, it's really around bringing up the data points that will help convince an investor that actually there is something that you're doing better than X, Y, or Z. I wouldn't say necessarily it's about the warm intro. I think if someone came into me cold and I could definitely see that what they're building is completely better than the things I've seen before, then I would sit down and listen to them. But I think there's probably still, and without seeing your deck, it's really hard to say, but I suspect that there's still something that needs to be maybe highlighted a little bit more. Maria, did you want to add?
Yeah, no, I wanted to add, I totally agree. I get this issue, the warm intros. I mean, it's known in the industry that if you want to get people to at least take a look at your deck, it helps to have like a warm lead in. I don't like that that's the reality. It's but when I think about it, I understand why it is, but I'm personally against it. But it is hard for VCs to look at every single deal they get. It is a very tough one. But there are two things I would say. If you don't have either what I say background or team profile that VCs love to see, like strong direct relevance experience, some experience scaling startups, I would say find a warm intro, but think of the warm intro as a pitch, because whoever is going to do the warm intro is putting their own brand on the line. They would want to push something, really great to whoever. Now that brings the burden of proof. It means that you're probably going to have to hit traction that is much higher than everyone, something that is hard to ignore. And which is hard because at the pre-seed stage, you have very little resources to really hit that traction. It's a catch-22. And this is the point where you can be very creative. So for example, and I allude to what, June is saying. If someone sent, a cold pitch and said, we started this thing 3 months ago, we're seeing 1,000 customers a month or like 1,000 customers a day. Like, it's like, whoa, okay, what is it? Like you have to catch their attention with something. If it isn't a warm lead, it has to be your traction. And at the end of the day, you would have to like just figure out ways, because again, back to how VCs work, not every startup, is a fit for the VC model. And that is the truth, because its requirements for growth and expected outcomes, it is the outliers they're looking for. I'll give you an example. For every 100 startups that apply, statistically, often only one gets invested in. Those are really low odds for VC. And it is the nature of the model. VC does not invest in everything. It invests in the crop of the crop that can provide outcomes that will become a unicorn someday and give the LPs the money, even though a lot of the startups in the portfolio might fail, the one that will kind of return the startup. So with that in mind, there's a lot of pressure on the founders to prove that it is VC backable. And that has to be some kind of crazy growth, or maybe like some kind of, really large market that no one has cracked, but somehow, you, Alex, cracked it and it's going so fast, and they're like, you know what, take this money so that you can kind of capture this. That's the mindset that kind of VCs take. So I would say that think of folks who could do intros, but also make sure that whatever information you're giving them to do an intro to you is one that will make them happy to do the intro, in terms of traction and progress and what you're trying to build. And if you hear similar things from VCs, just take it and reflect on it. So if they say something like, the USP isn't clear, and you're like, oh, but we're doing it automated, and they're like, yeah, branch is automating as well. That is probably like correct feedback. It's like VCs are looking for people who are doing something, not everyone else is, doing, because that's the way they will pretty much see that it's innovative, like customers will come for it. So it's like, is there anything within your business model that's truly, I guess, different, or does it differently? Or is your argument that the market is so large, it can house 20 branch and they can be all unicorns? Like whatever you're arguing, you kind of need to play to the fact that they are looking for outsized outcomes. So that's what I would add.
Thank you, Mary.
Thanks, Alex.
Thank you, Jen. Yeah.
Thank you. Ezekiel, did you have a question?
Yeah, I do. Yeah.
Hi, go for it.
So yeah, I just like first to back up. I think this really, really been exciting. And there's been a lot that I could actually learn. So my name is Ezekiel. I run a startup. It's a prop tech startup. I'm sure I found someone else that's in my space, but there's not a lot of us currently. And so in terms of like raising money, it's actually been really, really slow. Split, for instance, after 4 years, they are currently just raising like their seed round. Most of the other ones is pre-seed they are currently raising. And it seems like it's not very, very clear. And in terms of like the conversations now, some of the gatekeepers are trying to like propose using we prop tech guys using the traditional real estate players, which makes sense on paper, except that from preliminary discussions, we found out that the way they think about startups is very, very different. Like for instance, there's one of these big players was asking for 60% from a startup. So you get those kind of things now make it look as if maybe these are not the guys to go. We still have to go through the like normal route, or probably to get like foreign VCs. Like Split, for instance, was lucky to get into MetaProp. Rent Small was Techstars and those kind of things. That might still be like the right way to go. So it still kind of now boils down to the same thing. And unlike most other spaces, people in the fintech and the rest, they probably have more technical background. Most of us are coming, like for instance, I'm an architect, and I'm doing something in this space. So I understand the business side or how the other side is going to work. But when it now comes to the tech side, of course, that's where I now need some help. The question I want to ask is in terms of like raising money, what should be like in like the data room? We've had some conversations where they've asked for that. So some of the information, yes, I know, but then again, I think it's more like, what would you want to see? Like maybe someone like Maria or you, John, as investors, what do you want to see in the data room? Again, taking our own context of we just being like the new guys in this whole tech space, prop tech.
Yeah, that's a really good question. So especially for me, who hasn't done much in the prop tech space, and you're coming to me and you want to convince me to invest in your business, I love to see in your data room information about your background. I think as much information that will give me confidence in why I should back you, more information about your team. I'd expect to see a forecast, with projections for the business, just so I understand what is the actual business model. What are the funds going to be used for? What is the cash flow? Like what is runway for the business? Just so I can understand how you're thinking about how it's going to work in practical sense. I'd also expect to see any market data, comparison stats, just understanding what is the competitive space. So basically, because your pitch deck, I wouldn't expect to be more than 12, 15 pages max. Like I keep it as short as possible. But your data room is your opportunity to dive into all the bits that you feel like during the pitch, people had extra questions on. Okay, so there's a competitor in this space. Tell me why you're different. So you could have a nice map of really drill into why you're different to what exists. I'd also expect to see, if you're selling to businesses, I'd expect to see a pipeline in there, just with a sense of progress, just understanding, have you had conversations with certain people? Where are they? Just so I have a clear view of just sort of how much work you've done, research, if there's any research papers in the space. I'd expect them to be in the data room as well. It's really your opportunity to answer. You could even have an FAQ. I've seen, and this has worked really well, especially for super early stage businesses. So I invested in a company called Lick, probably about 3 years ago, and this was pre-product, literally idea stage. But what he'd done, and I thought was excellent, was he had this really long FAQ doc, every question that other investors had asked him, and he had put an answer there. And I thought, wow, you've really made my life a lot easier. So I'll stop there. I'll let Maria, add if she has anything else that she'd like to see.
No, absolutely. This is a very good question. And I guess one thing I would say is, depending on who the investor you're speaking with, they will probably have different requirements. I find this very much at the pre-seed stage. It's usually a very personal, or fund specific expectations. Some investors really at the pre-seed stage, especially if maybe there's very little traction on the product, or maybe the team fit isn't quite precise, they would want to over-index on, have you thought about this? And to June's point, having that document is an exercise actually for yourself, and it really does help. That FAQ doc, for example, in a data room, and a lot of this information is available on AfroPitchPrep. Like, we have a newsletter, we share tactical information, specific stuff that actually helps you, things like what you should have in your data room. So I really encourage everyone here to subscribe when you have the chance, and you will get it weekly in your inbox. If you were to think of a data room and what I've seen in pre-seed, and I've seen across different continents, it's like June said, some people have the model, the financial model. Personally, I don't over-index on it, but I actually encourage founders to do it. The reason why I say is it forces you to think about the inputs you need in your business. But I, as an investor, I don't pay a lot of attention to it, primarily because I think all of us are just at the pre-seed stage, you're just suggesting, whatever is in that doc is probably not going to happen either way. So it's rarely ever precise. So I don't really over-index on it, but I know certain investors do, and I understand the rationale. I would say that your team, so in your deck, you probably would have had your team, some logos, put a detailed bio. And there was something June said earlier, you need to explain, and not even you need to show why exactly you are the team to solve this problem, the best team. I'm talking, it kind of needs to feel like that is your mission, like your entire, life, the story somehow fits with this problem that you're solving. It makes it more compelling at the early stage. So detailed team bios, explain what you did in your previous things, what milestones you hit, why exactly those skills are transferable to the startup you're building. Or is it networks you have that, let's say you're an architect, you have networks of many architects in your network, or maybe real estate agencies. You're saying to the investor that, look, if a random person tried to set this up, they don't even have access to people I have access to just because of my background. So you're really trying to tell them why you're the person. So really make that case in your detailed team bios. One thing that many people think you need to have at the pre-seed stage is maybe say oh, people are already using the product, it's already growing. Sometimes you need money for that. So it's unreasonable to ask someone to have a fully funded formed product when they've not even received any funding. But I would say that there are very clever ways people have built out traction without having to do too much. I like to see things like wait lists, strong wait lists, or pilot conversation. If you're a B2B startup, you could literally find a business, that they're struggling with the problem you have, and you're like, look, we can solve this problem. Just partner with us for a pilot for 6 months. Put it in writing. The product doesn't exist, but here's what the UI of the product will look like. You've not built any product, though, but you're telling them that, look, do this thing with us in the next 6 months. You don't even need to pay us anything. We will build this. We will iterate the feedback with you. We will figure it out. But look for a good brand name. Again, VCs love to see potential outsized opportunity. So look for someone big and strong and say, we just want to do a 6-month pilot. It's free. What it means is that we'll build the product based on your feedback, and you will use it, and it will solve this very painful problem you have. This thing I've just said is not easy. It's a lot of hustle. And this is what I believe African founders have. Where there might, and the thing is, at the end of the day, everybody can talk. If the traction is there, if you can see that businesses are looking for this solution, people want to pay for it. It's hard for investors to be like, oh, sorry, we can't kind of look at this. Sooner or later, one investor will be like, look, this is an opportunity that could be potentially outsized. I need to get in on it. And that's the vibe you want to maintain. So I really tell founders that the fundraising, how successful you are in fundraising is actually how well you've prepared prior to the fundraising, because the fundraising process, you are just pressing play. You are literally just executing the strategy that you have prepared, that you have iterated. You've answered the question before the fundraising. You've gotten the data that you need to answer that question strongly during the fundraising. That's why some people, it looks like it's easy for them. Somehow, either, maybe their team, their background is a very strong fit, investors over-index on that. But if you realize that, for me, I didn't go to Harvard, I didn't do at Uber, I don't have all these brand names. What you have at your disposal is make it hard for them to ignore. Get that traction that they'll just be like, no, there's something here. It will be stupid for me to ignore this because this person is actually getting a lot of momentum. So that's what I would say. The other few things I've seen I've seen founder employment agreements. Sometimes people want to know that the founders have employment agreements that direct the IP of the company that the IPs the founders create to the company. So for some investors, it's important. I've seen other people put incorporation documents just to show that they're a legit entity. I've seen people put market research. So it's almost like that Notion page, that FAQ, you'll see everything like, why this team? Why now? Is this market large enough? How will you get to 1 billion? You've answered all the questions there. So even if they speak for 30 minutes, they go back, they're like, oh, okay, during the data room. And I think personally, having an organized data. So do you see in the data room, it's not anything complex. It's just things you put there to make your case when you finish the conversation and they need to figure out how big this is, how strong the team is. Second thing I would say is you mentioned earlier about your team, you're not a technical team or that, with other people in other industries, there isn't a technical, you don't have maybe access to technical co-founder, etc. I would say there is a bias in the industry. I think for people to not be technical and raise as a solo founder is much, much harder, especially if you don't even then have the background that gives the confidence. There are 3 risks that the VCs are trying to get over in the initial stages. Is it big enough? Can they build it? And if they build it, do customers want it? Because there's a huge risk that, one, you can't build it. So amazing idea, but where are we going from there? And the truth is, if you don't have a co-founder that is technical on your team, the next thing is you're probably going to hire someone who's more expensive. There are capital efficiency implications to not having the technical person as a core member of the team. So that technical co-founder, before you even, I think maybe even VC, just sort that one out first. That be getting ready, prepare your team. So that when they see this team, they're like, yeah, I can see why this team is the right person. I don't want to talk too much, but yeah, I hope that answered your question, Alex. Ezekiel.
Yeah, thank you very much. But I actually have a technical co-founder on the team. I'm not just technical, that's all.
And
thank you very much. It was really, really helpful.
Oh, thanks, Ezekiel. Caroline, I see you have your hand up.
Thank you very much, June and Maria, and everyone else that has set this up. It's actually been very insightful, and thank you for making us feel comfortable and feel at home. That's very important, so you don't feel all jittery and anxious. I want to say something because when Alex spoke, it was kind of contrary to our experience. So he says that most of the VCs want to know why what he's building is different from what is already in existence, and some of them have already funded organizations that are doing what they're doing. But in our case, I'm a founder of intellectual property trade digital platform, which is very unconventional, and we're not like the pioneers, so to say, but it's almost like that, because how many intellectual property trade platforms are in existence? What do we want to use as backup to say this is going to work? So that's been our experience. We need to prove more, and we're ready to do that. But then I just wanted to, understand the balance. What do we do to a lot of people have told us that, why don't you just do fintech? Can't you see that that's what's working? And it's so easy for you to transition what you've built already into fintech. And the truth of the matter is, sometimes my team members look at me and like, why are you being stubborn? Because truth is, we can actually easily transition this into a fintech, and I've seen people do it. But for some reason, I believe so strongly, and I'm not being magically optimistic. We're doing our research. The time that we've waited while talking to VCs, we take back the feedback and we try and, build, and we've added features and we're growing the product. But then sometimes there's still that skepticism somewhere. Up until yesterday, I was like, should we transition, or what do we do? Or am I just in the clouds? So that's where we are, trying to be the first one to believe in intellectual property trade, which we call ideas, selling ideas. And everybody's like, who's going to buy ideas? But we've done our research. We've seen people buy ideas, but we know there's a way to which it's been done and why we've created what we've created.
Caroline, I love this conversation. I think this is so important. I think you're in this beautiful phase of, what we all describe as product market fit. So I think you're still in this process of trying to figure out where exactly, like, who your customer is, and I think the minute you are able to validate that, then all the naysayers will go away, because they're like, actually, there is someone out there who this serves. And I think what you're doing is right. Continuing to have the conversations. Like, when you say, obviously you started to collect proof points, what sort of data are you collecting? How are you tracking this?
Okay, so one thing is we actually are in business right now. We have customers. We're even running an ideation campaign. That's what we choose to call it, with Zenith Bank, which is one of it actually is the biggest bank in Nigeria for 2022. And we're running a campaign for them in collaboration with them. And we pitched to, wanted to prove the product. And I think this is proof of product for us. But then for the VCs, maybe for some of the VCs, they were like, okay, we want you to have a local investor and all that. I'm like, okay, isn't us having customers that are actually paying us for this product, isn't it more validating than having an investor? Because sometimes investors even invest in a product that's not been proven, that eventually after so many years don't get any form of business. And we've just been in business for a couple of months. And I think 5 months after, we got a client as big as Zenith Bank that was able to say, yes, we want to actually do this. We love what you're doing. It's very relevant in terms of the fact that fintechs are springing up everywhere and they need ideas. But one of the, some of the data that we collected was initially when we set up the platform, people were like, because it's new and people have not heard about it, how many people are going to go and register their ideas? Because an idea needs to be registered. It needs to have some form of legal document to back it up in order for it to be transferred to another individual, for it to be sold. So we went ahead and said, okay, let's take that information back and see what we can do. So we also included another feature on the platform and said, okay, let's start allowing people to sell unregistered ideas, where we will now partner with a legal firm and register the ideas on behalf of the individual. So we select the ones that we feel like, okay, these ones gain the most traction, because what we do is when we put it on the platform, we open it up to customers, that's the users that want to buy the ideas, to show interest. So for the ones that have seen the most interest on the platform, if we're registering the idea for you because it's going to cost us some more money, we're going to take a larger interest, that is a larger commission, pardon me, from those unregistered ideas. While if you don't want to give the extra interest or the extra commission, then go ahead with the process. And a lot of people already have these ideas even registered. So there's this young man that created a particular board game in a language. He put it in Nigerian languages. It was in Yoruba and Hausa, and he had it registered already. So puts it on the platform and then people can buy it. And what is intellectual property? We need to do a lot of sensitization though. We need to let people understand what that means because it's new. But basically, VCs are asking for different things. So some of them are saying, we need a local investor that believes in it. And we're saying we already have customers, we have traction, we have over 1,000 users on the platform. So I just wanted to say that as against what Alex is saying, I probably would have preferred to be that place where they said, oh, fantastic. So you're doing this, you're the first person to do it. And we're not particularly the first person to do it, because we've done research and found out that organizations like Unilever, about 43 major global organizations, have websites where they ask their customers and users to sell ideas. Now, we did research and found out that some of those platforms are not really safe because nothing protects the seller of the idea. They can take the idea and use it. There was even one of the platforms that said, we can choose to pay you or not, just to enjoy the enthusiasm that your idea has been taken. So what our platform does was now a central platform where all these organizations that have individual websites can now say, okay, we're also maximizing Ideas Marketplace, which is the name of our digital platform, and then put your ideas here. We protect the buyer and the seller, because sometimes the idea that you're also trying to sell doesn't belong to you, and sometimes it's a risk for the buyer to purchase that idea. But then an idea can only be sold when it's legally registered. So it's either a copyright, it's either a patent, or whatever category it's at. But then for us, being like the first central platform where intellectual property is being sold or traded, and we have quite a number of features in the pipeline, but we're not pushing that out yet because we want the market to first of all embrace this new idea and then be able to, but we understand all the different levels we're taking it to. In fact, we normally pitch the different features that we have in the pipeline, which there's actually a fintech related feature that we hope to add in future, but we do not want to come across as fintech. We want to be the pioneers of IP tech.
I love that. And honestly, first mover advantage, being the first of anything, I think comes with these challenges where people need a little bit more time to be convinced. But I think there's something to be said about finding the right partner. There will be an investor out there who is excited to go on this journey with you. And I think it's worth taking the time to find that right person, but also being flexible. I think it's a two-way street, being open to pivot if necessary. And I know you don't want to be a fintech, and I'm not suggesting that, but I think it's very important to understand all the feedback that is coming your way and utilizing that to make sure that you are willing to find that right product market fit, because ultimately it's about the big markets. Are there more Zenith banks out there? And I think if you can prove that there are multiple big clients that will come in, show the pipeline. I think this is where your pipeline will be really powerful in demonstrating how big an opportunity this is beyond Lagos, beyond Nigeria, for this market, but also showing like the competitors that you say exist. Where did they get to? Because where we don't have enough local examples, we would then look abroad to say, okay, well, something similar existed in, I don't know, India or in America. Where did they get to? What is the big opportunity here? So on that note, hopefully that was helpful. I'm going to move on to the next section because I'm conscious it's we're an hour in, and I really want to spend a bit of time on the actual fundraising process. So I think we touched a bit on getting that warm intro. Maria and I have said we don't like warm intros, but we cannot ignore the fact that in some situations it is necessary, and some funds operate in that way. So I think it's very important to be aware of ways that you can navigate that. And I think something to always be aware of is the actual portfolio companies. Very often we get so many intros via our founders. So I would say don't be shy about reaching out to founders within certain portfolios, but also use that as a way to better understand the way the fund works. Because I think in all of this, we have to remember that it's a two-way street. You are interviewing the fund as much as they're interviewing you. It's a 10-year relationship. So I think really doing your due diligence on them is key. And a good way to do this is by speaking to actual portfolio companies, and then getting them to introduce you. And other investors are good, other angels, being part of networks where other people are fundraising as well. I think there are several Slack groups, there are several WhatsApp groups. I would say in you know, in Lagos specifically, I'm not sure how many people are in Lagos right now, but I would, you know, join meetup groups. I think there are several sessions running. I was there already 2 weeks ago, and I found out that there were so many places that you could go and you can just hang out with other founders. And I think leverage those communities in person and online to get introductions and just ask the question, look, who are people speaking to, and ask for a reference. But I think in that email, just be as concise as possible and clear about what you're hoping to get from an interaction with the founder, with an investor, what you're hoping they bring to the table. But having done that research around them, it's very clear within the email, you know, which founders have actually done the work and are being very intentional about not wasting their time. You never want to send a really long email. I mean, I've seen some super long emails, and the thing is, investors are so time poor. If I showed you my inbox today, you'd cry for me. It's really bad. And, you know, it means that when I'm going through it, I need to, like, you need to catch my attention, like, really quickly, like punchy email, really clear, straight to the point. You're actually doing me a favor. The more concise it is, the clearer you are about your ask, the clearer you are about where you've gotten to, and how much you need, why me. It makes my life easier. And I thank you when those emails are short and brief, and, you know, you have a clear deck, and I can tell that you've done that work before coming to me. It makes me more inclined to want to respond quicker. But I think one thing to bear in mind is how time poor we are in general. And that's not to say that it's an excuse, but I think if the more you meet us halfway and make this process as easy as possible, then we're excited to, like, get in front of you and hear the story. And the next bit, you know, once you've managed to get that intro, you're in the room, or, you know, virtual or in person, I think the pitch is so, it's so important that you really think of it as a very human interaction. I think, unfortunately, there will be some VCs that are maybe not necessarily as smiley, but don't let that put you off. I think ultimately you want to make sure that you can work with this person. So when I say that thing of you're interviewing them, I think really take the time to help them get to know you and you get to know them. And, you know, we're talking sometimes a 30-minute for that first pitch. So you have to make sure that you're using every minute really carefully. So I would, you know, I would say some of the best pitches I've had, you know, they've come in and just been very thoughtful about telling me the story. Because I think at the earliest stages, you're backing the founder. And that's the reality. The people who get me the most excited are those who, not saying you have to, like, you know, be super, I don't know what the word is. You're not expecting any comedy lines or anything, but just be yourself. I think you can tell when someone comes in and they're completely themselves. You know, we want to understand where you went to school, how you spend your time, why you care about building this product. And, you know, that thing Maria said, you know, why is this something that you've been obsessing over? Why is it important to you? Understanding that connection from, you know, why you left your main job to why you're sitting here in front of me, telling me that this is something that you believe needs to exist, is so important that it adds up, that it makes sense, and that you convince me that you're the best person and you can build the best team around you to deliver, and that you're not going to give up until you find something that works. Because you know, this is a 10-year thing. You know, it sometimes takes a while to even get that product market fit, but are you going to stick through it and not give up until you get there? So I think that's so key, that you use those 30 minutes so well. I mean, half the time, the first meeting, I don't even look at it. We don't go through the pitch deck. It's just a conversation. So I think don't feel obliged to whack up the pitch deck in that meeting. You could be like, actually, we're not doing that just now. Let's chat. Let's just have this human interaction where I tell you about me, you tell me about you. We figure out if we have this commonality and if we both care enough about this to go on this journey, because they have to care too. And then that's another thing to talk about. Speaking to the right partner at the fund matters. You know, not everyone, you know, very often in a big fund, you'll have multiple partners. And depending on who you end up speaking to, that's the person that's going to have to champion you at the investment committee. So I think also be very intentional about who you decide to approach. It has to be very strategic in all of this. The person has to be the one that will get it. And very often you can find that out, as we talked about in the last session, by reading their Medium posts, by listening to their podcasts that they've been guests on, where they talk about the sectors they care about, the problems they want to see solved. There is so much information that you can access and you can use to synthesize the people that you should actually be speaking to about your problem. And building that moment, it's important that you get people excited. Why should they care enough to spend time, not just capital, time? Because I think this is it. You don't want someone who's just going to give you 150,000, $1 million. It's not just about the money. Actually, you want someone who's so invested that they want to share all their know-how because of the businesses they've invested in the past, or their personal industry knowledge, and want to share that with you, that they want to open up their black book of contacts to you to ensure that you succeed. So you have to be very conscious that it's your responsibility to get them excited, to get them to care. So I think it's important that you think about how you convey their messaging in that first 30 minutes, because I think if you don't do that, it's very unlikely that it's something you could do later on. So that's really key. And I think don't be afraid to be very human and vulnerable in those discussions. Pricing the round, for when you get to the point at which we're talking about valuations, as we said earlier, it's very subjective. This is something that I know many people on the continent, safes are more common, and I think it's a bit different over here, where if it's a price round, then obviously your lead investor is pricing. But what I would say around valuation is obviously take the temperature. Take the temperature, think about what are the current market numbers, speak to peers, do your research, make sure it makes sense if you're setting the valuation on your safe. But also, I think don't be afraid to challenge it if it's a number that doesn't feel fair, if somebody else is setting the price. I think it's important that you know your worth. If you've put a ton of work into building something and you've got the numbers to show that there is validation, I think if it feels like an unfair price and it's too low, push back. But I think it's a back and forth. There is no magic number, and you can't say because someone got priced at that round a few months before that's the round price that you should have. But I think be flexible, be open. And then obviously it depends on how much you're willing to dilute. But I would say, I think Ezekiel mentioned earlier about the prop tech space. Yeah, you never want to be giving away 60% of your business. That is just wild. Don't do that. Don't be afraid to speak up. And I think it's so important that you're willing to walk away to protect your work. That's very key as well. I think, the standard that you would see in any round, you'd never really give away more than 20 to 25% ever. I mean, this is like between all of the investors, you're never really diluting that much more. And founders, I think, so key. You never, ever want to be seen as having a tiny proportion of your business, because then it's like you've got no skin in the game. So I think protect your ownership as much as possible. Don't give out equity just like that. I see that happening, unfortunately, quite a lot, where you're giving out equity to advisors, and don't do it. It's not worth it. So I think really be mindful of how you give out ownership of the business, because all those are flags to investors further down the line. And also, don't get anyone to pitch for you. I haven't talked about that yet, but I think it's so important. And we hear of this, and introducers, like no VC wants an introducer coming to do the pitch. Like, don't do it. So yeah, I think it's so much more compelling to hear the story from the founder. This is why we would invest, because of you. So I think the last thing we want is someone else coming in on your behalf to have a conversation with us. It's like a big flag for us anyway. But I think, when you're thinking about due diligence. It's you've gone through the ranks in terms of the process. Perhaps third meeting, they say they were going to start the due diligence on you. I think it's important that you're ready. It takes time. It takes a lot of time. The process, depending on the fund, could be something as simple as speaking to all the founders and just wanting to understand your backgrounds a bit better. If you have an MVP, it could be going through that. It could be like really diving into your data room, going through the models with you. It varies depending at what stage you are and how much you've actually done. But I think something I flag to founders is, be prepared that, this is time away from the business. So depending on how many you are in the team, I would say make sure that there's still someone to continue running the business in this time, and you divvy it up accordingly. But I think be as prepared as you can in terms of having things ready before you go into this process, so that it's all ready to go. You can be like, look, this is all the information you'll need. Again, the FAQ document is super helpful here. And yeah, I think that's pretty much what I'd say about this. And Maria, anything I'm missing?
No, I think you've really captured it. One thing that I would say here, and maybe it's important to bring up, I personally think that thinking about your round dynamics should be split between angels and VCs. I think, especially if you haven't raised a round before, or this is your first round, I would say think of angels very differently to VCs, because with VCs, you need to have built momentum. That's what I found in my experience before you're able to close them. So really think of your strategy of closing angels first. And angels could literally be anybody. There are people who pitch to everybody. That rich uncle that, has been supporting you, or that auntie that said, you're a very smart, young lady, or you're an amazing woman, you are building something, I will support you. All of them. Start telling them about what you're building and start refining your pitch. It's very important because you kind of need to get the narrative right. You kind of need to know what resonates, what doesn't. You double click on that. When you say this, people tend to perk up. Okay, I will say that more. When I say this, people tend to then be worried about this specific thing. When next I'm saying that thing, I will include that thing they're worried about and give the answer to that. So there is an iterative process, and angels are much more, would I say, kind. Like they don't over-index on your issues. They'll be blunt with you. So they're a very good place to experiment, refine that. Because if you're raising, let's say, for example, 200K round, and you say, I've raised 100K from angels, investors are like, okay, you've raised money, because even ability to raise is something investors are looking at right now. So the other thing I would say is like, yes, after you've exhausted like maybe family members and I guess like friends, people you've worked with in the past, these are very strong signals, because it's like, if you've worked with someone in the past and you're telling them that you're raising, for your startup, and they invest in the startup, you probably were a good employee, or you worked very well with them. The other thing I would say is like, sometimes angels are a good signal. So for example, if you're in an industry and there is an expert in that industry that invests in your startup, that's often a good sign. So if you're in the real estate industry, and it's also a good way to sometimes get partners on board so that they have vested interest to make sure that you both are succeeding. So I would say like really think of investors beyond the traditional VC to start. And you would be surprised that there's a market for many different types of investors. And potentially that can even help you hit milestones that you can then go back to VC, especially if you don't have like the fancy background. And I would reiterate this, and I say this because I know that it is common in the industry. Like it's very different. It's a very different experience for when someone who has maybe, worked at a startup, software engineer at X, Stripe, and the person, has tech experience, did MBA from this. All of that, they just be like, okay, you have to be impressive, because for all these people to hire you, you would have gone through something. So they have all these signals. If you don't have all of that, all you're down to is your hustle. And that can be very, very compelling when it is hard to ignore. So you kind of need to be very creative about like where you get your funding from, speak to, low-hanging fruits, how you get traction, making sure that you're able, if you need to, you can't be shy and be a founder. I just have to say it, because at some point you have to share yourself.
That's true.
Like, you can't be shy. So you kind of need to, and it's also a signal if you're not If you, the founder, are not very bullish about your startup, nobody else will be bullish. So if you can't be like, this is it, I'm here, I'm doing this, and you are speaking to people that you need to speak to, getting in rooms, like spreading the vision of your of your startup, if you are hesitant, that's also a sign. The other thing I would say is, and I know this might be counterintuitive advice, I feel like as you raise, it is better for your own mental health to decide whether or not you will continue, whether or not you raise VC funding. Like, you kind of need to have that tunnel vision that it works, it doesn't work. I really believe there's something here. I will iterate and make sure that I find something that has enough traction that proves to me that my hypothesis is right. Because June said something very important earlier. And she said something like, be flexible. To be flexible with your thesis, because the truth is, whatever you propose as a business in the beginning is a suggestion. You are saying that, based on my experience, I believe that there's a market here. You're going to have to go and find proof of that belief. And whether or not it's true is fine. You need to iterate and find that proof. And that's the product market fit, because when you find that proof that you are building something the market wants, it's often very clear in the traction. You see rapid adoption, people want to pay, things are breaking, it's moving too fast. That is what you're looking for. So don't be too committed, like, no, I really believe, because the market is brutal. It can prove what you're saying, like, and get it off the bat. And it might be like, no, this is not, you have some things right, others not so much. So your job really is to iterate and find that initial signs of product market fit that what you're building, the market really wants. And it's not just something you think the market wants. There's evidence. It's not your thoughts. There is evidence. There are customers who are already willing to pay for this, even if it's not built, because you've signed pilots. There are customers who are on wait lists because you gave them a sense of what you're trying to build, and they were so interested. So I would say, like, that is also very critical. But at the end of the day, you have to have in your mind that whether or not this thing raises VC funding, I'm going to build. And if you iterate and you decide that, okay, I've done my best, that's also a valid path. So yeah, I think those were my thoughts, just to add to what you've said, June.
That's amazing. I guess one thing that just popped up as well is, being very strategic about how you're going to run the process. I think something I've seen founders who've done this really well and run a very tight ship have just been very intentional about how long it's going to take them. It doesn't always work, but it does help to have a time frame in mind for how long you actually want to be out there fundraising. And I think it's important you communicate this to every investor so that they know, and do not be afraid about creating FOMO. So when you get your angels, you let those investors know, you circle back, you keep them in the loop as to your progress. You ask them, do you mind being included on my update list? Have an update list as you're running this process so that they know how you're getting on. Any new milestone, you include them. I mean, don't email them every minute, but, like, you know what I mean? Like, keeping them enough up to date so that they, as they're going through their process, have constant data points to help them refine, whether or not they actually want to come in on the round. Because honestly, people change their mind. They're constantly convincing their investment committee. And the more information they have, the more data they have around how much progress you're making, it does help. Sometimes even just knowing you signed this client, just knowing this investor, this particular investor that has expertise in your field and would be a strategic person and door opener, just knowing that could be the difference between you succeeding and not. So don't be shy about over communicating information as you go through the process. I'm going to stop at this point just to say, does anyone have questions, comments around how their process has run, or if you're currently in a process right now, anything you want to share or ask? And feel free to jump in, raise your hand, cameras on, cameras off, whatever makes you feel comfortable. Caroline.
Yes, thank you very much, June and Maria. The advice has been very, very helpful. Like, I already know a couple of things that I'm going to go and put to use immediately after this session. One thing I wanted to ask is, so Maria has already touched on that, because I do not particularly have a co-founder at the moment. I don't want to rush into getting a co-founder. I want it to be the right person, because sometimes I've even seen co-founders too that give up on their co-founder after a period of time. So it's not always cast in stone that the co-founder is ready to stick with you all through the process. But I also wanted to ask that, is there a point in time after a particular duration that you should begin to be skeptical about what you're building? So when we were building, we had this strong belief that in the first 3 months, this would be the outcome, this would be the response we're going to get. We're in our 10th month now, and we're not actually seeing what we expected. After 12 months, do we say, okay, now it's time for us to pivot, or, which I hope we don't have to, but is there a time duration attached to it, that is reasonable for you to begin to say, we should go ahead with this, or we should make the changes that are necessary, which we've made quite a number in just 10 months. Amazingly, I'm impressed, but I don't know, with what we've done in terms of being flexible and looking at what the market is saying and trying as much as possible to make it convenient. Organizing onboarding sessions for young people, for married women that are not probably like housewives. I don't like to call them that, but women that don't particularly work, but they manage their homes. It's actually work as well. So you can't say they're not working, to just have them put together their ideas and then let them know how we can help them onboard those ideas. There's even a school for children, for women, that they train them how to design, and then they have a website where they put the designs on, and fabric making industries and fashion designers buy these designs and pay for them. So we plan to onboard people like that. But the duration sometimes gets at me. I'm like, okay, it's been 10 months. Does time have anything to do with the decisions that we need to make? Thank you.
Yeah, I'm happy to jump in on this one. I have, I guess, 3 thoughts. The first is, if we walk backwards, there are many different measures of success of a business. Getting venture funding is just one. And I would argue that, to be honest, customers are more priority. Like, to confirm the viability of a business, a stronger signal is that customers are paying for it consistently and over time. VCs want very specific things before you fit. And it's very easy to think that just because you don't fit that, you're a failure. It's a lie. It is not true. And yes, it is great to have VC money. It supercharges your ambition, etc. I think personally, for every early stage founder, it is very dangerous to be too attached to the original version of your idea. Think of your idea as a kernel. It's going to evolve and morph. And actually, at the pre-seed stage, you should be testing it aggressively. And whatever does not provide the data or the proof points that you need to validate that your hypothesis is true, you pivot based on feedback on the customers. So it needs to be an iterative process. I would say, as you begin with your initial thesis, see it as a proposal. The market will tell you, you start hearing consistent feedback. No, this one. Then you say, why? Then they'll say, no, because of this. Then you're like, okay, this is an infrastructural problem. Before we solve this problem, we need to solve this problem. What if we solve this problem? Then you're asking them, so if we did, ultimately, you're trying to get to a point where the market demand, willingness, and ability to pay is strong enough for you to build a business. Do not be attached to your original idea. It is merely a hypothesis, because the distraction is that you have that idea and you're just looking for confirmation bias. You're just looking for something to confirm that this is what you think it is, like what you thought is the truth. No, you're suggesting to the market that this is what I think. Tell me if it's the truth or not. And they will tell you by the optic. If it's not, then you refine. Tell me if this is the truth or not. They're like, yes, we want this. We're looking for this, but will you pay for it? No. Then that's not the right thing. So what will you pay for? So it's a lot of, at the initial stages, it's really iterating. And all of this needs to at least start happening in the beginning stages of before you fundraise, because that is exactly what the use of fund goes into. One question I ask founders when they're pitching to me is, so far, what have you proven and what have you disproved? What have you learned, like, so far? Because I don't expect that your original idea is what it is that you're pitching. Because one thing you would say is, some people will be like, oh, we really thought that people would pay for this particular thing. But what we found was that they actually would not pay for everything. They would pay for one particular, like, I'm looking for those granular level of insights because it tells me that you're iterating fast enough to reach product market fit. So do not, this is my personal advice. And I think I've seen the best founders are those who iterate very quickly to finding what that is. Because when you find it, it's clear. You don't even need to explain to someone. You'll be like, we're getting so much demand. We're solving this problem. Like, it's all just a lot. That's where you're trying to get to. Yeah. Not that, oh, we're trying to pitch to them. They're trying to, they're still considering, like, because at the end of the day, you want to find something that they won't consider, like, you've kind of, hit the nail on the head on the problem that you're trying to solve. So that's what I would say. I think that is very, very, very important. The timing for the fundraising is critical. Like your rapid iteration, and you want to do that cheaply. You want to do that is not really expensive. Like, once you start getting some common feedback, that's already a sign. Start optimizing for that. Okay, if we were to do this, well, we've done it. They're like, okay, we will now use this, we'll test it. You want to keep rapidly iterating, especially in the early days, because when you get to your seed or series A, what they're asking are totally different questions. They're not asking you if you're experimenting. They're like, okay, you have found the thing that people will continuously pay for. How rapidly can that grow? That's what they're asking. Like, is it strong unit economics? Are you spending less than you need to get more than you're getting? Do those margins look healthy? Can this be $1 billion business? So that's what I would say. And I don't know how helpful that is, Caroline, but I would really urge everyone not to be too attached to the original version of their idea and let the market decide what it wants, because it's the market that will pay for it ultimately.
Thank you very much, Maria. Sorry, I just want to say something to that because this is very helpful for me. I think it's been one of the most insightful that I've been on in recent times. What I want to say is that in 10 months recently, we've been able to make quite a number of adjustments that we were just in one space when we started, and that was register your idea and put it on the platform. Now we have unregistered ideas. Now we have a subscription plan, and that was based on feedback where some of the organizations, the corporate organizations said, why would I want to come to your platform and just search for ideas randomly? What if you have 200 ideas on the platform? Phenomenal, but they have nothing to do with my organization. So we took that information back and we said, okay, we create platforms for each of these corporate organizations whereby their platform and they can request for specific ideas, pain points in their organization, whereby these people are not working in your organization, but from anywhere in the world, they might have the answer to what you need as a daily pain point. It doesn't even have to be the most phenomenal, like next idea. It's just, okay, in areas of XYZ, we need this information. And we've got corporate organizations that love that aspect of the platform. So we've did quite a number of features, made adjustments to the things that we're hearing in the market space, and with all the other advice that has been given today. It wasn't really doing enough work when it comes to angel investors, but taking the information back from what you've said. We'll be doing that. And just like you said, it does come to my mind sometimes that if we don't get VC funding, are we going to continue this business? Do we see it working? And I would say yes, because it was based on my story, my experience that made us establish this platform in the first place. And we're very open to being flexible and knowing that this is the goal. Intellectual property trade is so broad based on the research that we've done, and it's easy for us to innovate as much as possible. So we find
amazing. I love that. Well, thank you so much for sharing, Caroline. Magali, I see you have your hand up. We'll take one more question and then we'll move on to the next section.
Thank you very much, June. Thank you very much, Maria. Thanks, everyone. As Caroline was saying, I think it's been the most insightful webinar or session that I've been to. So thank you guys very much for organizing this. My only question is, you mentioned that we as founders need to get the traction that will make the investors, whether it is VC or business angels, that will make it hard for them to ignore us. And for my case, I'm building consumer products, that needs education, that needs educating the users. And to do that, I need time or money. And so my question is, for this kind of product, how do I convince educate my first users so that they can understand the product and then start using it, and also try to go to business angel or VC and tell them that I need money. Like it's tricky because I need one to go to the other, and none of them are in my basket yet.
Well, I would say, this is where getting very hacky works. I think be super creative about ways you can start speaking to users, potential users. This is where people have, beta groups, and the people you're going to get in that group are the ones that are going to help you with, ideation, that initial product. Like, you literally will go with a blank piece of paper, and I'll give you an example with me. So I created Mums in Tech. Again, zero background in building a coding school. I've never built anything like that in my life. So what did I do? I put out a mailing list. I literally went on MailChimp, said, looking for people who might be interested in learning to code. Yeah, I haven't built anything yet. I don't even know what I'm building yet. I sent it out, put it on a few, at that time, the thing that we used was Meetup. Yeah, so I put it in like the comment section of a Meetup group. And then I emailed it to someone who said, oh, there's this great, what did they use at the time? It was called Ada's List, and they had a mailing list. So she was like, oh, I'll pop it in the mailing list for Ada's List. So it was a community of women in tech. So we'll put it there, see if anything comes back. So you leverage what exists. You try and find where these people might sit. It might be in Facebook groups. It might be on Instagram. It might be on Twitter. It might be, you find where you can find some similarities. So I did that. People came back. We're interested. What are we signing up for? I need to go figure that out, right? I go and figure out that this is the curriculum that I like. But guess what? I don't have any teachers, and I don't have any money to pay anyone. So I need volunteers, right? Who am I going to ask to teach? Okay, well, let me think. I worked at a bank where there are a lot of startups. I'm like, guys, you guys can code, right? You build stuff. I reached out to them. I said, okay, look, these are the things I want to teach. I want to teach UX. I want to teach, how to build a product. So I had my key things that I wanted to be delivered, but I still don't have a course, right? So I reach out to these people, and they say, okay, well, let's try and figure it out together. So this is the key. We're trying to find a hacky solution to create your curriculum. I'm not Coursera, I'm not Codecademy, I'm not Makers, but I can see what they've done, and I can, hack it together. And that's what I did. I used some free resources, tried to figure out what would work in the time frame. I knew that I wanted the session to last 3 hours. I knew 15 moms could work. I knew in that session I wanted it to be interactive. I knew we'd have babies. I knew we'd have distraction. Think about all the things that you could work around. How much time do you have in the week to dedicate to this? If it's something you want to do on the side, maybe you do it via a WhatsApp group. Maybe you have an evening a week where you want to get people together. Figure out what works for you to be able to spend time with your ideal customer, understand everything there is to understand about them, why this product needs to exist. You want to be able to validate that and collect data as you go through that process. That's going to be super key. Collect as much information as possible to give you the confidence to be able to go into the room with your initial angels, your initial investors that you speak to be able to say, look, this is what I've done in 3 weeks, 4 weeks, 6, whatever time frame you decide you need to be able to validate that there is something worth uncovering. And I think that's what you're doing with this pre-seed money. You're, as Maria says, you're trying to validate it. You're exploring, and that's okay, but you need to have an end goal. What is it that you think So what is your thesis? And if that doesn't work, then you pivot, and that's okay. But people are backing you and trusting that with the information you've come to them with, there is something worth uncovering. I hope that sort of helps a bit.
Thank you very much. Yeah, I was getting new ideas as you were speaking. Thank you very much, June.
You're very welcome. So I'm gonna.
Sorry, I know we're really running out of time. One very quick thing on something you said, Maggie. You said that there was a lot of customer education. This goes back to whether or not you want to go the VC route or not. When you are trying to grow very quickly, sometimes you're really trying to find the existing pain point that is so painful that people are already looking for solutions and you're 10x better. You actually want to avoid having to educate them on the problem, because think about that from a very crude perspective. That takes time. That probably means the problem isn't one that they're already facing and looking for solutions. And it could be a timing thing that maybe if you set this up later down the line when they've been educated on the problem, then they're looking for a solution, then you're coming at the right time. But I would say thinking as a founder and as a potential investor is very important, because you need to balance, I guess, the passion, which is great, but then also the execution speed and getting the right customers who are facing the right problems and solving their problem quickly enough for you to start, like what June said, getting those initial signals that, okay, there is something here. Otherwise, what you might struggle with is even proving to investors or even finances, doesn't even have to be VCs, that there's a problem here. They're like, if you're having to educate people that there's a problem, and then they are like, oh, there's a problem, is there enough incentive for them to potentially continue to buy a solution at scale? Just something I'm sharing because, we're keeping it real here.
Absolutely. Thanks, Maria. And Magali, thanks again for that question. I think a lot of people would have had a similar one, so it's good to chat that through. So the next section is something that we've talked through already, but I think it's helpful to have it pretty much spelled out. This is your typical investor process. As we said earlier, you'd have sent your deck in with your intro, and then you would typically have, two conversations. The first usually with an associate in the team, and then maybe that gets moved on to a partner. And again, it varies in terms of timing, but I think that first conversation, as we've highlighted earlier, is so critical, because you want to pass through that filter, but it's important that you make your mark, you build excitement in that conversation, giving them enough reason to ask you in for a second chat. And then after that, we talked about due diligence, having your data room in good order so that it's straightforward and has enough information. But also reference calls is so key. This is something that you should have ready to go. A couple of people who will be happy to provide personal references. You also want to have people, potential customers that will be happy to speak to your investor. This is something that I like to do if I'm investing early. I still want to speak to a few of the people that you've had a conversation with that you're very excited to be your early adopters. Even if they're the ones who've used your MVP, that's still fine. But I want to understand why it's solving a pain point for them. And you can also be very clever about this. You could have pre-recorded conversations ready to go. You could have a document with, where you've got customer references already ready to go. I think having that handy will save you a lot of time in this process. And obviously, this only happens when the investor is really serious. So it's not like you're going to have 20 investors calling this one client that you have. But I think it's so important to have that in your back pocket. And then, when you get your term sheet, you're then at the point where you might have to negotiate certain terms. I think in this session it's probably going to be too tricky to go through a full term sheet. But I think, the key things that you want to look out for are, the valuation. You want to understand what are your rights as a founder, how much control the investor has in your business. I think that's something that having someone in your legal team, having good lawyers that work with you and really run through the term sheet and all the legal docs is so important that you take the time. There's a lot of things that founders miss, where you find that the investors have undue control. You never want the one investor having majority control over your business. It's so important that you just these little details. What does your board look like? Can you appoint someone to the board as well? Just knowing all of that, and also your responsibilities. What are they expecting from you in terms of compliance, in terms of providing information to them on a regular basis, and also you making sure that you can stick to this, because these are legally binding documents. So anything that's written in there, I would say take the time to really run through before you sign, because once you sign, it's binding. So really just just think about how you want. It's essentially saying, how do you want your business to be run? How many board meetings are you going to have? How often are you sending information to investors? What are the things that you agree in terms of warranties? How much debt you can bring into the business? Things like what are you allowed to pay yourself? What are the activities of the business? Because guess what? Once you sign that and you say, I'm doing XYZ, you can't wake up tomorrow and say, first you're building a consumer business. You can't suddenly build an airline business. It has to be very much within the same field at the very least. I'm not saying you can't pivot, but it can't be so different to what people believe they're investing in. You definitely can't use that to fund the lifestyle, and I think that's definitely not what anyone would expect. But I think it's so important that you do take the time to understand what you're committing yourself to, and have a good legal team with you. And then of course, wiring funds, that's the fun part when the money comes into the business. So I'm gonna not take questions on this. I'm gonna whiz through to the next bit and then take questions right at the end. And yeah, we've talked a little bit about the term sheets, the offer, the considerations, and completing the round. I think, Maria, we've been very, very efficient. I think
touched on all of these things already, actually.
I think, yeah, we've been very thorough. So I think this brings us to the end, nice and clean. I hope you found this session useful. Again, happy to take questions at this point. If there was any questions around term sheet, I'll put that slide back up if that's helpful. If anyone wants to put their hands up, we can sort of go through. Does anyone already have lawyers that they work with? Is that a conversation that you've already started to have? Ezekiel, did you want to jump in?
Yeah. I don't know if you could just share more lights on, I know you've talked about term sheets. One, I don't know, it might not sound very, very intelligent, but it's always been something that not been clear. Who sends the term sheets?
The lead investor.
In an ideal case.
It would be the lead investor. So that they would be the ones who set the terms, and they would price the round, and they would be the ones who usually would appoint a lawyer to start the process.
Okay,
and
so
go ahead.
Yeah, so like they send it to the startup. So like, does every other investor are we then going to now send the same term sheet to all other investors, like to agree like this, or how does it then work from that point on? Or everyone else just drops money and is not really entitled to any major terms? I'm sorry if the question just sounds really, really basic.
No, not at all. Maria, did you want to jump in?
Yeah, no, I wanted to add, like, I mean, obviously, June and I are not legal professionals, can only explain like what from our experience, but at the pre-seed stage, what we see is the predominant use of safes, especially in the region. So many people don't necessarily have like proper like equity rounds that's priced where you might need a term sheet and all of those other fun stuff. So most of the time with the safe, is somewhat the founder will set one valuation, agree with someone who has the largest check what the valuation is, and that kind of becomes your terms for the round. Then you kind of get everybody on those terms, or you receive money based on different terms depending on the investor. That's one way. For like the proper term sheets, usually in an equity round, and yes, the lead investor sets that. They set the price, the terms of the investment. Other investors tend to follow those terms, so they can't exactly, what I say, negotiate something different from like the original term sheet, because term sheet will probably have language that says that for this round, everybody goes on this terms. Here are the special things that I'm entitled to as the lead investor. And here's what the average investor is entitled to. But potentially this is one for maybe an even deeper session on the legal bit, because this could go like many different places, and I'm quite aware that we are running out of time. So I hope that answered it to some extent, but I think it would be definitely one for a much more legal focused session.
Okay, I think it does, but so I think on a very basic level, you'd advise that for pre-seed, it's just best to just do a safe, right?
I mean, it's not an advice. This is just like my own experience, what I've seen. I just think that safes are just sometimes more cheaper. You don't want to stay on them for too long as well. Like, you probably want to convert them to equity in your next round, because we have seen people who have safes upon safes upon safe, and it's hard to figure out your dilution that way. So for the first round, I think safe is just decent, especially depending on where you're incorporated, which is why I think like this is a much more robust legal conversation is required here. But what I've seen on the continent is safes are easier to just pretty much implement. But oftentimes, because of the nature of the safe, they require that you are a US incorporated entity, which can then have a different implication, something to consider. But safes are easier the standard. You just pretty much adjust the valuation, maybe the discount rate, and they're cheaper. You don't kind of need, I guess, like a lot of legal work. I realize that we are getting close to time. I know a few people have had to drop off, but I hope that answers that question. And maybe after, TechCabal Insights will set up something on the legal bit, because this is and it's an important one as well. But yeah, hope that answered your question.
Yeah, it does. Thank you very much.
Brilliant. Yeah, Maria, do you want to close up? Thank you so much, everyone. This has been great.
Yes, it has been great. We would love to stay in touch. We share a lot of resources, especially on our newsletter. Things like what you should have in your data room, things like, what a good pitch deck looks like. There's a lot of tactical content templates that we have plans to share. So do subscribe, share with your founder friends. We're very passionate about this. We don't get paid for this, by the way. Like, June and I are just like, it's very important to us, because we really do believe entrepreneurs try to change the world, and the energy you bring to the world is important. Without entrepreneurship, there's no innovation. We really want to support that. And obviously at AfroPitchPrep, we have our website as well. The other thing I would say is we also have a session, a mock pitch. I touched on it earlier. If you go on our Twitter, you see the link. If you subscribe, you get the link. But we have the opportunity for you to send in your pitch and get paired with really incredible investors who will do a one-on-one mock pitch with you. They will tell you what they think in plain terms. They will tell you, you would get feedback, and you can have more than one pitch, can have several pitches. So do take advantage of it. Not everyone gets invited, unfortunately, but for those who do, I think it's just incredible to be able to get that feedback directly. But even if you don't get invited for any reason, if you subscribe on the newsletter, there's a lot of content that will be coming your way, demystifying all of this VC stuff. So yeah, thank you so much for having us, and many thanks to June, who took time out of our day as well to kind of chat all as well. So yeah.
Thank you.
Thank you so much, June and Maria. Thank you for such an insightful session. And I'm really glad that we got some of the feedback on the call as well. It was clear that it was a very useful session. So thank you so much for the time. And thank you to everyone who also made our time to join as well. I know it was about 2 hours, which is a long time on a Tuesday. So thank you all so much. As Maria has said, kindly subscribe to the newsletter. We'll share the link in the chat as well. I don't think it's on the slide, but we'll share the link in the chat as well. And we'll also share the link when sending you the recording for this, just so you can go back to the session and refer to the things that were said and apply it, in your fundraising process. So definitely subscribe to the newsletter to get more useful resources from the AfroPitchPrep team. So everything that they're putting out for, upcoming, for startups and founders, you can have access to it. Yeah, I think Maria has shared it in the chat as well. So thank you again, everyone, for joining. and have a wonderful, wonderful day.
Thanks, everyone.
Thank
Reach
you.
out, don't be shy.
Yes,
Bye.
you can always connect with them on LinkedIn and just
Twitter.
share any questions that you have. I know we couldn't take so many questions on this call, but I'm glad we took a few. But you can always connect on LinkedIn and just share questions, and I'm sure they'll be happy to answer them.
Definitely.
Thank you, everyone.
Take care, everyone.
Thank you. Bye, everybody.
Bye.
Hi, this is Kim Chagane. From the Comb podcast, where we unpick a single African story every week. If you have a look at our feed, you'll find stories.